Good morning, everyone. We are back with the Prospero.ai stock market live streams. Welcome back in here. Hopefully, you had a great weekend. It was a weekend with a lot of updates and announcements and news that we're going to get into today. A big crypto announcement came out over the weekend. If you guys follow that, that's one of our major stories today. As we saw, the markets all opened up green, but we're kind of fading as this morning continues on. The QQQ, the SPY, the Dow, and the Russell are all now red. The Russell is the leading on the downside, and the QQQ is the one that is leading on the upside. It's trying to fight to go back green today. We're going to start, as always, with the state of the markets when George gets in here. I want to ask him about the SPY flatline at zero for net option sentiment in Prospero. So let's check right now and see if it is still at zero for net options sentiment. And it is today still at zero. So he mentioned in the Sunday newsletter a little bit about the flat line of the net option sentiment and just what that means. But I'll let him get into more detail here and share why that might be so bearish for the markets. Then let's take a look at QQQ, see where it is at in net option sentiment as we're starting the stream. QQQ is at 23, so well above the SPY, but definitely not a great level. So we'll start with the state of the markets overall. I saw that I believe NVIDIA is down 5% already today. Let's check out some of the other big tech stocks and see where they're at. Let's see. Apple is slightly negative. Amazon is over 1% red. Meta just went green. It's basically on the flat line. Microsoft down. Tesla, the lone survivor, in the green right now. Oh, actually, Google is green too. So two in the green. So the market is definitely mixed start today. Leonardo Uscati said, hello there in the chat. Hello, Leonardo. Thanks for being here today. As always, before I'm about to get into some of the stories we're going to cover, but like the stream, it helps our channel grow and more people discover these live streams covering the market. So I already kind of mentioned the crypto story. So there was 5 cryptos mentioned in what will be in the strategic reserve. I'll let you know what all of those are and what it means for them going forward. In a market of uncertainty, is this the only certain place in the market? We'll get into all of that. Then I have the Chipotle CEO going on an interview and mentioning that he intends to absorb the costs of the tariffs that affect his company rather than passing them on to the consumer. So is this a good strategy? And is this why we're seeing some weakness in the overall markets if businesses are planning to do like Chipotle and absorb any costs and affect profits? Then we have Apple, according to a Bloomberg analyst, working on a version of Siri that will come out in 2027 that will be fully conversational. But with the speed of technology, is this quick enough? Obviously, we just covered last week Amazon Alexa Plus just got announced and released, and all the other competitors in the AI space. But it seems like Apple always takes a long time, and they plan on developing things to be perfect rather than just getting something out there. So will this strategy work out? We have Elon tweeting over the weekend about Tesla stock. I see in our chat, Mario Mech said, morning all. Good morning, Mario. Elon tweeted that with perfect execution, he believes Tesla stock can 1,000% gain, or a 10x, over the next 5 years, which would leave Tesla market cap at about $10 billion. So is this possible in the first place? Or is Elon just shooting for the moon? And even if it's not possible, where can Tesla be in 5 years from now if full self-driving comes out and they have the Tesla Optimus and all of that? Next, I have AMD, which actually fell below $100 per share at the end of last week. Let's see if it's still there now. We've been covering the struggling AMD stock for some time, the challenges that Lisa Su is facing. It is back over that 100 milestone mark. It is at 101 right now, so it's regained that. But I think a fun thought experiment for any AMD shareholders to hear would be, is AMD closer to becoming Intel or Nvidia? Which company are they closer to? We've covered that's kind of like both ends of the spectrum for the semi space. Nvidia firing on all cylinders, their technology doing great. Jensen Huang leading them in the markets, and then Intel, exact opposite of that. So, which one is AMD closer to right now? Leonardo said, was surprised to see ADA among the coins mentioned in the announcement. I was a little surprised to see that too, Leonardo. I'm interested to hear George's opinion on that. The fact that some other cryptos were mentioned besides Bitcoin and even Ethereum. Amongst them, I guess I'll just let you guys know them all right now. Solana was one of them. ADA, which is Cardano, was one of them. And then what was the last one? Let me see. XRP. So 5 in total. A little odd. It's almost like if the U.S. is going to buy all those cryptos, why don't they just buy like the Mag 7 stocks? I think that's something I'm going to ask George as well. Okay, 2 more stories to get into before we're going to get into the model portfolio at the end of the stream that I'll share with you. I see another comment though. Is there someone taking CPU share from AMD? What is the threat? CPUs are still necessary? Um, yeah, very good questions. Very good questions. We'll definitely cover those. I'll remember. I'm sure we'll have some more comments by the time we get back down to it, but I'll remember to ask those to George. He actually just texted me. I don't know if you guys were watching at the Wednesday stream last week, but we had a lot of technical difficulties, and his camera was like glitchy and freezing and whatnot. But he just said when he tried to get on today, it made him install an update. So he might be late here today. So it'll just be us talking here for a moment, but he will be in here at some point. Let's actually, I mentioned some of the cryptos that were added into the announcement of the strategic reserve. Let's take a look at how much they moved over the course of the last 24 hours. I'm pretty sure I saw that Cardano was up like 60% or something. Leonardo said, yes, XRP, BTC, ETH, and Sol was less surprising. There's already institutional interest, but ADA didn't really see in crypto Twitter feed. Curious to see if there will be more coins added. That is an interesting point. The fact that they're starting with 5, there's nothing stopping them from adding more in the future, I guess. So I guess there could be more coins added. Yes, almost 70% ADA, 70%. Now it's down 10% today. So it seems like all of the cryptos that popped are kind of giving some of those gains back today. I see Bitcoin's down 3%, Ethereum's down 6%, XRP down 7%, but that was another one that I think made a big move. Cardano down 10. So yeah, they're kind of moving lower with the markets as we start off today. But like I said, I have 2 more stories that we'll try to get into. Maybe we might not get to all of these today since we might be getting a late start to the topics. But I have this Bill Ackman story. If you guys don't know who Bill Ackman is, he's the CEO of Pershing Squire. He had a criticism of Warren Buffett, saying that Warren Buffett has been too conservative in his investment approach over the past several years, and that Berkshire Hathaway will be a better run company when Warren Buffett decides to step down. And this is a little bit on the other side of the coin from when I posed that to George last week. He mentioned how when Buffett actually decides to step down, he would expect Berkshire stock to take a hit, at least in the short term, just out of respect and the legacy of Warren Buffett leaving them. But Ackman seems to disagree, and the data was pulled up, and Pershing Square is up 100% since 2015, and Berkshire Hathaway is up 250% since 2015. So does Ackman really have the right to criticize when Buffett is almost doubling up his profits? Hey George, welcome into the stream today. So one more story that we're going to get into. Disney is reportedly planning to implement surge pricing. So is this a good idea for them? How come companies are allowed to do this? It almost seems like price gouging to me. So if Disney does go ahead with this, and I've heard people already talk about how expensive their prices already are. If they decide to surge price them at specific moments, are consumers going to rebel against them?
Hey, Stephen, my computer has decided that it wants to run a very long update, so we're going to do it in reverse today. We're going to do the model portfolio update, and then we will do.
Oh, I like it. Okay. Interesting switch up.
Who knows? I mean, that thing could be it could still be going when we're done with the model portfolio, but at least we're not just sitting around waiting.
Yeah, good idea. All right. So, folks, you get a treat today because usually you have to wait all the way to the end to see this, but it's what we're going to lead off with today.
Let me just get everything set up. One of those you probably noticed that I like the background is different.
I did.
I moved, so that's another
Ah,
reason why. Normally I try to. I've been the last two times I've been not great about doing a dry run on the laptop because sometimes it has problems. But I think the problem last time might have been because it wasn't updated, and you know how these devices work. They can protest a lack of update pretty easily.
oh yes. I know that all too well. I see Jonathan asking in our chat about Root. I believe you added it before, and now I see it in the upside breakout screener.
Oh, interesting. Yeah, I last week I was considering either adding Root or Snow. And Snow did very well at the beginning, but Root actually did a little better. So had I added them both, last week would have been a lot better. But it was still a good week, all things considered. All right. I am getting everything ready. Now I just need to find where this is, and there we are.
Leonardo asked us in the chat one question about the investing newsletter. When you add a long position, what is the usual holding time frame?
So that's the thing. There is no usual holding time frame. It's just when the signals change, and that's how I use it. But everybody's different. Some people want to hold for longer. And what I always kind of say about this too, what I always say is like I have my own method, which is entirely signal driven. I'm getting out of something if something changes, or for example, I was talking about how I got out of something because QQQ net option sentiment changed and everything looked fine, but I just wanted to change my levels. I'm highly signal driven. And I mean, the thing about the longs is any of the longs I add, I like on a 1, 2, on a long time frame. If they look good at upside breakout, that's back tested to a year. But it's just a question of how much you want to follow my kind of more active investment style, or do your own, which is a longer hold, or something in the middle. All right, we're getting ready to. Here, might as well take this. We're in March now. This year is flying by. All right, QQQ SPY net option sentiment. Where are we at?
SPY is still down at 0, and the QQQ is at 23.
That's where it was. Well, there's my computer, I think, rebooting, but it already did it once. That was the other funny thing about the update. It said that it was basically like, we're updating, the computer might restart a number of times. It's like, okay, how long am I in for? I held out until the first one.
Large cap growth has extended its correction downward. Small cap growth is right there with it. We might look to incorporate more value into this if this trend continues one more day. We've gotten some sharp corrections, and especially if the tariffs are pulled back again, that could cause a fairly violent move in the other direction. Definitely worth looking at real estate on the bull side, and nothing really stands out outside of tech on the bear side. If anything stands out on the bear side in energy, we will look for more opportunities.
I just heard my laptop restart again. I'm glad I wasn't sitting there waiting. I would have just been waiting.
I don't know if I could stall for 17 minutes.
Yeah, I mean, I think I got on at like 11:08 on this machine. So if it's still restarting, we'll just continue on this machine. And we can just start, and we'll make the switch if that thing ever feels like waking up for the day. It's having a slow Monday.
Tech had a nice start today, but the fake outs are getting pretty regular, and the market is really having a hard time sustaining a rally.
We have 27. Damn. Some of these Carters. 27.42. Okay. I know I exited. I did some of those ONs tomorrow, but I mean, yeah, earlier today, but. look at some new longs because we're really disjointed. That's what I'm looking for. Okay. Okay, let's see what we got here. Okay, so what do we got here? All right, this looks good. This is low, but let's look at our real estate options. I feel like I want it higher than this. Let's see what else we got. What else looks good on the sectors? I think we want to do one more. Financials, we got some. Healthcare. Oh. No, we don't want any large cap. Yeah, okay. And then anything stands out here. Let's see. Choose. Okay. I feel like I want just a few more lines. Okay, and then
Well, if Jonathan's still here, I'd be happy to see. I think Root was added long.
what?
Jonathan with Root being added long. There's his answer.
Yeah,
for sure.
to the trading portfolio, definitely. Okay, now I need just this. Okay, let's just set this to send at. Okay, so let me check and see how we're doing over here.
Okie dokie. Let me take a look at the happenings of the market and see if anything has changed in the 30 minutes that we've been live that I could share with the chat. George is getting the tech.
Yes, you can see me setting up here.
All right, taking a look at the Mag 7, Apple still red, Amazon still red, Meta green, Microsoft red, Tesla green, Google green. I think that's the same as when we looked before. Let's also look at NVIDIA, which was down 5% when we started the stream today. It is...
All right, switching. I'll see you guys on the other side.
All right, see you over there, George. NVIDIA is down just 4.5% now, so making a bit of a comeback. Everybody stick around with me for a second. We're going to do the reverse switch today. So we did the model portfolio first, and now we're going to get back with George on his better setup. Here, I'll remove you. So there we go. All right. So you're just left with me for a moment, and we're going to start with the topics when George gets back in here. I see we've already had 11 likes on YouTube, which is actually pretty good for us. So thank you all for showing us some support today. Over 20 live viewers and 11 likes. That's good to see. Hopefully you guys, it didn't bother you too much that we're switching up things today, but we're going to get back into our topics now. Let's see. Let's check on some of the other things we were going to bring up today, like AMD and Bitcoin, see what's going on there. AMD still at 101, not much change there. Bitcoin is down 2.83% right now, so slightly higher from when we mentioned it in the beginning of the stream. as always, let me say, if you guys have any questions, concerns, stocks you want to hear, stories you want to hear that we are not bringing up today, just feel free to let us know in the comments. We're happy to answer anything you guys want to know. So don't be shy. Just let us know down below. And without further ado, we'll start off with what's current state of the market. Obviously, we saw the model portfolio first, so now George has to explain why he made the moves that he did because of what we're seeing in the markets. Usually it's the reverse. And then we'll go from there. And hopefully he's not too long here. Looking at the overall markets, they're all red still. They did bounce up green for a short period, but back in the red. Russell is still leading towards the downside, now down over 0.5%. And QQQ is still holding up the best, down just about 0.1% right now. So, but all of the markets heading lower. It was definitely an interesting note that you made, George, in your letter that's now been sent out for everyone about how it seems like every move is being faded almost instantly, whether it's a bullish move or a bearish move. Do you think that's just a sign of the volatility that we're living in, and institutions know that what's going to swing one way swings the other way, and these are just counter trends in the daily trading? And then also in this first market segment, I want to talk about the SPY zero flat line. Why is that so important?
All right. So hold on. I want to send this, now that we're doing this, I just want to send this out to a few people, and then we'll be ready to go. Why do you think the zero flat line is so important?
SPY zero flat line, or any flat line, why is it so important? I just think it shows a level of commitment to the people that are making the bearish or bullish bet. You know, when it either flatlines at 0 or 100, they feel so confident about that direction that they're willing to just hold their bets steady versus kind of swinging back and forth, or having that signal start to move. That's the way I would see it. Just a consistent view and a confidence in that view.
Yeah. So, I mean, I think that's kind of how I would think about it, like any net option sentiment, like generally. But I think the thing about it is that, I don't know what is this thing? Oops. I see like a dark.
I was actually going to compliment on the setup. I think it looks good right now.
Yeah, I don't know. There's like this thing like right here that's like dark. I don't know. Anyway, I don't want to get distracted. So because it's SPY net option sentiment, and we saw some interesting behavior where we saw QQQ at 0 this year, and we hadn't really seen that, especially with SPY high, because people were so nervous about tech around DeepSeek. But SPY QQQ, those are the most popular hedge positions. So what it means, hedge funds are called hedge funds for a reason, right? They're hedging. So what it means is like there's probably very few hedge funds, institutions that are going long without having some short position, right? And SPY is the easiest one, especially because this large cap, we just looked at large cap growth, especially because of that. What tends to happen, the companies that tend to get most overvalued, especially what we've seen with like the Mag 7, tend to be the large caps, because those are the safest, most profitable ones. That makes them the most attractive. That creates the most demand, right? So those are, the best way, if there is a correction, the, SPY, QQQ, some people, depending on the market, if there is something like DeepSeek, you could have plenty of people that have the preference to hedge with QQQ. But yes, it's just a sign of uncertainty, right? It's a sign of hedging, and the more it's fixed at 0, the more people are not removing, to your point, not removing their hedges, even if the market lifts a little bit, like we saw with QQQ. People were removing some of their hedges, maybe taking more calls, right? But for SPY to be at 0, it means that there's not a lot of demand for calls. And there's a lot of demand for puts, and it's staying there, right? Nothing's changing. That means people are pretty certain in their bearish view. That's why it's a really good predictive signal for bear runs if it stays like this.
So over the weekend, I think probably the biggest breaking news that came out was Trump's tweet about the strategic reserve and the fact that he mentioned not only Bitcoin and Ethereum, but there was 3 other cryptos mentioned: XRP, Solana, and Cardano. The smaller the crypto was and the more unexpected, I guess, by investors to be included, the bigger it moved. So Cardano was up like 70% yesterday, while I think Bitcoin and ETH were up like 10%, XRP and Solana up like 20, 30%. But we're seeing them all fade back a little bit today. How surprised are you that this reserve is not just Bitcoin and even Ethereum, but others are being included?
Yeah, I mean, I think that's probably the most interesting part about it. Because I don't know if that was mentioned before, but either way, if you think of just the total market cap, right, it's a much bigger deal if, something like Solana gets invested in, right? Because that could move, the US government could move the price of Solana a lot more than it can move the price of Bitcoin, especially if there's anything close to, like, you could put in a 10th. I mean, I don't know what Solana's market cap is versus Bitcoin's market cap. Maybe you want to look that up. But just my guess, and I don't really know crypto that well, so I could be wrong, but this is just like a back of the envelope thing. Even if a 10th of the money is put into Solana and Bitcoin, I imagine that's orders of magnitude a higher percentage of the market cap than Bitcoin. So yeah, that's a big deal. But also, that's what makes this market so interesting and so challenging, and why we wrote about it on Sunday, and we the Sunday before we wrote about Steve Cohen and him basically saying he's bearish and he thinks the economy will actually retract in the second half of the year due to the tariffs. The way those stories kind of work together is that it's become especially difficult for even institutions to predict this, right? Because Trump was supposed to be the president, right, that supported, Bitcoin, right? And you could say that he still has supported cryptocurrencies, but I think what's confusing to people is, and makes it hard, is like, he kind of, if he wanted to support Bitcoin, like, it was bleeding for a few weeks before he decided to make this announcement. And if he wanted to support it, keep it, very strong, then it would have been better to make the announcement early. Or, a cynic could say maybe him, and or his friends wanted a better entry point to buy it before the announcement. And it being such a surprise, like, as I mentioned in our letter, Coinbase net option sentiment, I hadn't seen it so low in so long. It was at 55 at a point on Friday and closed at 60, right? So you could say it's almost as if when, the market had really started to pummel Bitcoin, it seemed like a lot of people had given up on it. That, the timing, I think we like to say things like this. That timing would be a very good way for anyone to kind of maximize their profit on this event, when a lot of other people had given up and it had seen like a pretty big price decrease, right? Because it might have been getting close to a natural floor where people start seeing value outside of this news event. And when you start seeing like net option sentiment lose, the argument could be made that it was getting closer to its natural floor. So you're kind of maximizing the profit, maximizing the rebound before other people start seeing value again. But it's very interesting, and it just shows how hard it is to time this market. And that's kind of what we said in our letter last week with Steve Cohen, that it's just like what we might see, especially if like we're starting to see with Steve saying that, and like what we might continue to see is people basically saying, Wall Street basically saying, hey, if it's going to be like this, If it's going to be like this, so hard to predict, we don't like things that are hard to predict. We'll make it easy for everybody and we'll just short it. And the SPY net option sentiment being at zero certainly jives with that.
So I looked, Solana has about 80 billion market cap and Bitcoin 1.8 trillion. Do you think that these five were named and this is all there will ever be, or is this opening up the door to that we could see more added to this list in the future?
I think that's an interesting question. And I think that it's open. I think it's definitely open. And I actually think that it's smart, right? I think that, any kind of diversification is always good. And especially if we're using it as an investment, I think it makes tons of sense to be open to a diversification.
So switching up topics here to Chipotle CEO, he went on an interview and he said that he is planning to have his company absorb any costs that these tariffs that are about to be tomorrow as of the latest date. Instead of passing on the cost to consumer, he's going to absorb them. Is this why we're seeing a lot of stocks struggle, besides the points that you've already mentioned? If businesses plan on absorbing the cost, that hurts their margins, hurts their profits, and that could be one of the downside effects that we're seeing drive the weakness in the market?
Well, I think the problem is the market, we talk about this all the time. The market doesn't like uncertainty, right? And I think even if you put into models, right? You told people exactly what the tariffs would be, right? And everybody agreed right now. It was like, okay, there's going to be these tariffs coming in, and China says, there are going to be these tariffs coming into these products. I think the problem and kind of what we're, seeing unfold with the the situation in Ukraine, where I think sometimes some of these things, there's so much dissonance, I think, as strategy, right? Where it's just I think there's a certain negotiating style that Trump has. And I'm not saying whether it's, good or bad, or, I know we have people on both sides of the aisle, but it's a style that is very confrontational, right? And traditional diplomacy, and I think this is what some people like about him, traditional diplomacy is very diplomatic. It's less confrontational, right? But the problem with confrontational, diplomacy is that if you're talking about we already saw this experience with tariffs, and then other countries saying, well, we're going to tariff back. And he's saying, well, we'll have retaliatory tariffs, right? I think that's the real underlying thing that makes people worried, right? If there's a confrontational, negotiation style, even if it works in the end, it's going to be some short-term pain, at least. That's essentially the argument that Steve Cohen is making. That, the budget cuts with Doge, these tariffs, if these all stay the course, there's no way there isn't at least short-term pain, even if they do have long-term results. And I think that is really the tough part about this, is that I think if there's one thing that we know pretty well, is that if one side decides to escalate this trade war, it's very unlikely that Trump says, okay, well, you raise your tariffs, we're gonna, we'll just keep the initial one. The confrontation is going to escalate, and it's the confrontation escalating to unknown levels that is making the market so nervous. And it's a similar thing with Doge, right? People don't, Steve Cohen tossed around the term, if you take, $2 trillion out of the market, which is their goal, right, out of the economy, that's going to have a real impact, right? Do we know if they're going to get to 2 trillion? Who knows, right? Do we know what timeline? I don't know, right? And I don't think Steve Cohen knows either. He was using the number that they were using. But that just kind of makes, again, the point, right? If it's some number between, what's been cut already and 2 trillion, right? And not really knowing, there's not really necessarily a theme to the cuts that would help people model, right? So you kind of have both of those things at play, and this is exactly what, we talked about, like the options expirations, disappearing, but like this is the nightmare for people on Wall Street in terms of, modeling and the difficulty around modeling. It's very, very hard to be able to look at this situation and even know what numbers to put in. And basically what happens if you don't know what numbers to put in, you end up assuming like the worst case scenario. But I think where we're kind of seeing some of these like pullbacks, and is there like even the worst case scenario is hard to model because we're not on a traditional map. And so that might be a lot of extra cushion. And that's why I'm very nervous and why I, really de-risked the portfolio. Like I didn't look at, any of our traditional names that didn't have value this weekend. And that's the first time that I've ever done that. And like, it's hard, right? Because I wrote about AppLovin, right? And I wrote about AppLovin, and I even said, I suspect that there's a good buying opportunity here. But I don't know where, and I don't know where the floor is. And if you saw what happened, like it looks like short sellers, are very openly attacking it. And you don't know if it's because they think it's going to go down a lot or if they think it's like, going to be a better price, right? And an analyst came out and basically said, I believe in the 600 price target, and it's trading at about 400 and at a good day, right? And that's in a nutshell what makes this so hard. I could sit there on Sunday and say, we like App. It's good in the signals. We definitely think there's a reasonable floor here where there's value. But the other side is like, we don't know what's going to be said. We don't know what's going to happen with these tariffs. We know shorters are going to be opportunistic. If they see an opening, even if they love App long term, just to get it at a better price, if they see the opportunity to get it at a better price. And it's kind of the reverse of how most people think about retail and momentum, right? It just gets, valued higher and higher and higher around momentum because more and more people believe in the value, the more other people believe in the value, right? And this is just the reverse. And retail doesn't short as much, but it's essentially the reverse of what we're talking about with institutions, where they're like, well, they're not necessarily thinking about what the fair value is, what App could do in a good market. They're seeing an opportunity to push it down along with the other people that short it. And in those scenarios, in a risky market, it's very hard to say, just like it's very hard to say on the other end what a good value is. It's very hard to say what a reasonable floor for a high growth company is like that. So it's a tough market to look at. Even today, we're kind of treading water a little bit more. And it's just like, it's the perfect example of what we're talking about too, where it's just like we got into Taiwan Semi. It opened up at 8 net option sentiment, which is very, very low for it or any kind of large cap growth company like that. And 20 minutes later, it was at 27. And there was an announcement of a meeting with Trump and that they're going to invest $100 million, right? So that's even we did it in the macro, but even something like Taiwan Semi, which, by the way, has potential negative stories around Trump and negative stories around, tariffs or problems with China, all of that, that had a positive news event, right? And the crazy part is, part of me was like, maybe I should get out. It had this positive news event. But in the end, I was like, no, I've actually been burned both ways on this. And it's still a 27 is still a pretty low net option sentiment. And I stayed in and it's back down. It's not where it's higher than where I got it, but it's kind of close. And that right there, we went through the macro, how it's tough, and in the micro, how it's tough because right there, we have something that, has probably more scary narratives around this administration than positive ones. But on any given day, something could change. Something could change big. And I think part of that is circular, right? We talk about how a CEO might announce a buyback or they might announce a new product or something like that if their stock price is taking a hit, right? So if people are concerned about Taiwan Semi and Taiwan Semi is concerned about Taiwan Semi and what might happen with tariffs and what might happen if tensions rise with China, like, what is a good way to fix that, right? Go to Donald Trump and say, hey, we're willing to invest money, right? We're willing to invest money in America. That's kind of the equivalent of balancing what concerning stories might be around for you. And, we kind of said the negatives of like what escalation could look like, what a confrontational style could look like, but that's a positive, and you got to be fair, right? I think like a company like Taiwan Semi that's willing to put more money into America because of this style and because of how things are playing out, that's not a bad thing for us. But it just kind of goes to show why this is such a hard market to play. And, back to what we were talking about with Leonardo earlier, it's just like Taiwan Semi looks like a good long-term short. And we got into ASTS when we thought it was like a discount. It was up like 9% pre-market because they made a big European announcement with Vodafone, a big partnership. And we thought we were getting a deal at 2% down because it looked like it was going to swing back. 82 net option sentiment, 93 upside. And, within a half an hour of that, it was, it's rebounded a little bit. It was much lower. The net option sentiment had gone down. I think it was to 72. So yeah, it's just like you look at this and it's just really, really hard to, know what to play, because the reason I got into ASTS in the first place was because the market looked like it was going to be a little stronger today. And I was, pretty short. I was more short than long, and I didn't have any tech longs. So I was trying to balance it out more. And then when it was going the other way, I was like, oh, Taiwan Semi actually looks like a really strong short, a really strong long-term short too. And, already it flipped really quickly and it had a news announcement. So it's just like in this market, you really have to be sensitive. And, one of the reasons that like our like advice is different than other people is we're very signal driven, and we say that, and it's just like there's no reason for us to keep a stock when the signals have turned, and we can switch into another stock that the signals look better in, right? And that's what we recommend for everyone. But it's kind of the same kind of thing that I wish more people would have with politics, right? Where it's just like people have different styles, and different styles fit them, and they have, different opinions on it. And I think just kind of understanding that people have, different ideas, and it's not quite an apples to apples comparison. But I think a lot of people are always trying to kind of make their strategy match other people's as closely as possible, follow things as closely as possible. But, my advice is kind of the opposite. And that's why we present the signals in the way that we do, because we want everyone to use them differently and manage to their style instead of saying just buy this, sell this. And I think that's very, very, very important, because only you can execute your strategy well. And there's so many different factors. There's knowledge, there's free time, there's risk tolerance, there's subject matter expertise that everybody has differently. There's investment education, there's available funds, and there's just like so many factors that I think the more you think about how to leverage a strategy to your strengths versus mimicking anyone else, I think the better you'll be.
So you highlight a lot of the reasons that the market is struggling right now, and I want to go to a stock that's been struggling even before this, AMD. It fell below 100 for the first time in over a year. I thought an interesting thought experiment would be, is this company closer to NVIDIA or Intel on the spectrum of chip stocks? Obviously, NVIDIA like firing on all cylinders. Intel not able to get out of its own way for a while. And we had D. Curtin commenting a while earlier, kind of asking about what are the threats to AMD? Why is it struggling so much? Is there someone taking CPU share from them? CPUs are still necessary, asking with a question mark. So all those things for AMD.
Yeah, I mean, I think that they're definitely closer to Intel. They're on a very like Intel-y path, I would say. And yeah, I think that the big thing with AMD, and we kind of come back to it, is it's just that like there's just a leadership problem, right? You look at this and it's the same thing with Intel, right? And that's why I think it's the same. And like that's why like this is such an easy answer, right? Because you look at Jensen Huang, there's so few leaders that, you know, I would say there's two components to what Jensen Huang does really well. And there's different types of leadership styles, but these are the leadership qualities that people respond most to. There's delivering on your promises, right? Ambitious innovation that you deliver on. There's a lot of people that can talk, right? A big game, but talking a big game and delivering on it is huge, right? And it's just like they have these big chip launches and everything, and that's the other side of it. There's like a showmanship as well that he's really, really good at, right? And if you look at Lisa Su, right, I don't think she's very good at either of those things, right? And on the like delivering on promises thing, like I think she's better at that. But the problem is if you don't have ambitious enough goals, right? If you just hit your marks, like I think it was like the last earnings that they did, I think it was a double beat. I could be wrong, but it was decent earnings, but they weren't like exciting in the way, right? So that's what NVIDIA does well. Not only do they have things to be excited about, if you just look at their base business, they do such good showmanship around it. And I think, you know, you kind of look at the same problem, and that was the same problem with Intel. You do enough years where, you know, either you don't have enough ambition or you don't wrap it in a nice and exciting enough story, right? Or you don't do either. And you're just going to kind of keep taking a step back. You might not take a step back in earnings. You might be kind of like treading water. You might be increasing a little bit, but you'll be taking a step back in terms of the perception around you. And that's why we've talked about like it might only be a matter of time before Lisa Su gets fired. And not because she's doing a particularly bad job, just because she's not really getting people excited about the company. And, you know, it's kind of like what we were talking about with the signals, right? Where it's like, it's not necessarily that, you know, everybody's been saying, well, AMD is a poorly run company or anything like that. You haven't really heard that. You're starting to hear it a little more now, right? But what you've more seen is the market telling us that AMD is not an exciting company. And it's telling us it's not an exciting company because it's not attracting dollars, and the dollars are flowing out of it into other companies.
Well, speaking of showmanship, there's someone who is probably second to none, and that being Elon in getting excitement for his companies. He tweeted over the weekend that with perfect execution, he expects that Tesla stock can return 1,000% over the next 5 years for shareholders, so a 10x. That would put Tesla's market cap at about 10 trillion. How realistic do you think this is?
I got out of Tesla, and I'm just like, I'm getting a little annoyed with Elon as, you know, we just broke apart those two things, right? I'm getting a little annoyed with him on the results, the delivery of the audacious promises. And it's just like, I was listening to the last Tesla call because I was involved in it. Like I was in it at the time. and the earnings weren't great. But even when they released these not great earnings, the stock started going up, and that makes it very hard. But on that call, I think he said a similar thing. He said, Tesla could be worth 10x the Mag 7 combined. And it's just like, what is the value of that statement, right? It's like me saying I could have $1 billion tomorrow in my pocket, right? It's like, not in my pocket, but like, that's theoretically possible, right? Anyone can say anything, right? I'm not going to say it's not possible, right? But if you're talking in the minuscule percentages of chances, like, let's just break that down for a second in terms of even if, Teslas go gangbusters and robot and the Tesla bot goes gangbusters, right? Like, how much more is that than NVIDIA, right? NVIDIA has an expensive product that has a huge market share, right? Like, is there even an argument that robots and cars are worth 10x more than the chips that power them? Like, that to me, and we're not even talking about the 6, or I guess the 5 other companies, or whether maybe it's Eli Lilly is the Mag 7 without him. And it's just I would mind it less if he even had more of an explanation, but he really doesn't. He just says that, and then he doesn't back it up with anything. So it's just that, and it kind of goes back to what we're saying in terms of what Wall Street likes and what I like. I like things I can grasp and I can forecast well, right? What I can't forecast well is how many people believe what's quite frankly bullshit about how much Tesla could be worth relative to the other most expensive companies in the world, right? And it's not bullshit, again, because it's not possible. It's bullshit because there's literally zero thread to follow on exactly how that's going to happen and how that relative value is going to increase so much beyond those other incredibly valuable companies, which, by the way, many of which are worth more than Tesla today and also have very ambitious futures about them. So, I think that I think it's very frustrating, right? And it's look at it. It's I don't know how many people are going to buy that, right? I don't know how many, and Tesla trades so much on momentum, right? I don't know how to forecast. I don't know how to forecast, how many people are going to believe this story that doesn't have any backing, and then there's all the other stuff about, I think, Elon's wearing more thin on other people. They're starting to protest. Tesla sales are really down. It all adds up to all of these very hard to forecast events. And what makes it even harder is that it's not even clear how much Elon even cares about Tesla anymore, or if he's moved on to bigger and better things. And that is the bigger problem, more than anything else that I look at, and why it's I'm just I don't know how much he cares about it anymore, right? Because it's easy to sit there and say, I'm going to be worth 10x more than the other Mag 7 companies, and not really give an explanation of how that's going to happen, right? But that is kind of concerning, and that's kind of my point in and of itself, right? If there's not enough meat on the bone, it could just be words. And it could just be instead of building a detailed forecast and explaining exactly how maybe he gets to a more realistic number on a shorter time frame, because you don't need to go that far out, right? That's what makes things hard to forecast. And numbers just you can throw them out and they're meaningless. That's the real thing that I wonder, right? If he's just moved on to, bigger and better things. And it's just like, yeah, like he's got SpaceX, he's got Tesla, he's got a job in the government that's super, super important. Like, people don't have unlimited bandwidth. I know people like to talk about Elon Musk as if he does, right? And 2 companies, 3 companies, it's one thing. But, it's a lot. It's a lot that he's doing. And it's just a fair question to wonder, like, how big of a priority Tesla is when you're basically the vice president. Let's be honest. Like, maybe even like, and not just the vice president, he kind of seems like 1B president to Trump 1A.
Yeah, so a lot going on with Tesla stock, and that's probably why it's been so volatile. The next story I wanted to bring up today, I found interesting because we had just talked last week about the possibility of Buffett moving on someday and what that would mean for Berkshire. Well, Bill Ackman, well-known investor and the CEO of Pershing Square, came out and said that he actually criticized the way Buffett's been investing recently, saying that he's been too conservative in his investments and that when Buffett decides to step away, Berkshire will be a better run company. And then once he said this, obviously people pulled up the receipts and they found that since 2015, Pershing Square is up about 100% and Berkshire is up about 250%. So do you think there's legitimacy in what Bill Ackman said, or is he wrong for going at the king of Wall Street?
I mean, Ackman is very, very good at public speaking, at marketing, like at making headlines, right? Not taking that away from him. And honestly, we've talked about this before. Getting people to invest in you is the real game on Wall Street and investments or whatever. And he does very, very well with that. And honestly, if you combined Buffett's skills with Ackman's like showmanship, like forget it. You'd probably have like Buffett would be like, I don't know, like Buffett might be bigger than like BlackRock. He might be, BlackRock if he did that, but he's not really like Buffett's not really pursuing money like that. But it's also kind of silly, right? Buffett has had the same style forever, right? It's like if you want to criticize him overall, which is insane, like maybe you can, but he's not getting more conservative, right? If anything, like, yes, valuations are getting crazier, but, Buffett's going to stick to his guns. Like, I don't even understand that critique, right? Especially at the age that Buffett is right now. What do you think? He's going to all of a sudden, like raise his risk appetite? And by the way, that works. It works so well for him. So, yeah, anyone, like, I bet if you asked Ackman, like, privately, if he thought he was a better investor than Buffett, like, I don't think he could tell you. I mean, if he told you yes, I mean, it probably tells you something about Ackman. But what most people do not realize about the best investors, traders, anyone, discipline. Discipline is the thing that makes them great. And the more discipline you have and the more you can stick to your guns on your process, the better you're going to be, right? So I think coming for anyone that's sticking to their process is crazy. And that's kind of where we started, right? If he had any evidence that Buffett was getting more conservative versus just what he's doing, which is sticking to the same valuations, the same methodologies that he always has, it's the market that's getting crazier with their valuations. And you could look at any statistic right now to say that. So, yeah, I think it's pretty dumb to like come for someone's strategy that's been so successful. I really think that's I think that's kind of like, it's just to grab headlines, and Ackman's really good at that. But yeah, it would be interesting. I don't really, I like, there's some people that like, I know people that know them in the investment world. And so I get like a little more information on what they're like. And that's true for Buffett. But I have no idea what Ackman is really like. like I said, it's very possible that you'd ask him and he would say, no, I mean, sounded interesting and this is how you get headlines. But it's very possible he could say he's better, and then I would call him crazy.
So we've had over 2,000 people tune into the stream today. So thank you everybody who has stuck around till the end. We have one more topic that I'm about to bring up. Let me just say, if you enjoyed what we've covered so far, please like the video. It really helps us out. And if you have any questions or stocks before we end the stream today, let us know in the comments. But what I want to get to now is Disney, because I saw it in the Prospero short-term bull list for, I don't know, maybe the first time ever. I can't ever remember Disney being up there before. I couldn't find a really bullish story about them. So this is the only headline I saw. I don't know if this is exciting investors, but they're reportedly working on surge pricing for their parks. Will they be able to fluctuate the prices in real time based on demand? So do you think Disney could cash in an extra profit from this? I think from what I gather, people already kind of criticize them for high prices. So I don't know how much room there is to go up in their park prices, but what do you think about Disney and this latest?
Yeah, I mean they've got their own like situation, right? I actually almost added them. I think maybe some people that saw the model portfolio, I almost added them, but I realized that large cap was having a tough day. So I was just like large cap growth, and I don't really think they're value. But actually, let's not. I don't want to speculate. I'm kind of an interesting. Let's look at their forward P. I mean, they might be. They've been hit pretty hard. But yeah, I always like to sometimes I start saying things and I'm like, what is going on? NASDAQ's been really bad with their forward PEs lately. 20.8. Yeah, that's not, I mean, I don't know if I'd call it value. Especially in the communications. I want to get metas right now. 25.98. Yeah.
I'd be curious what Netflix is. I feel like it has to be a lot.
Oh, I would guess at least 50.
Yeah, right.
But let's see. Oh, I'm wrong. 39.89. I mean, I wasn't totally off. But yeah, I mean, when you put it like the stock price has gone down. When you put it like that, Disney is not that bad. But still, I just I don't know. Especially with I'm really on the long side. I didn't check what Alibaba was doing today, but I'm really, really trying to avoid anything that's consumer facing. So yeah, I think that's kind of what tilted the balance for me.
Do you have any thoughts on the surge pricing idea? I'm just thinking about if say this was a grocery store and the price of avocados was digital and it was live changing, people would freak out. I feel I don't know how much goodwill Disney will earn if they do this, if they implement this strategy.
Yeah, I mean, I think it's smart. I think surge pricing is I don't like it. I don't think anyone likes it, and I think it's kind of I think it's opportunistic and a little bit it's kind of what I think people hate about the direction of capitalism, where it's it's less about what's it a fair price to charge, and more about what is the maximum we can squeeze out of everybody with them still using, and I think people can feel that squeeze, right? We feel all these companies and everybody squeezing us, turning us over and shaking us out by the that old I was gonna say meme, but it was very pre-meme, someone just getting the over and having the change shaken out of their pockets. But yeah, I think that it's something that we're gonna see more of, and from a technology AI perspective, right? I think that I'd like to see, like, I think it's actually done in just like annoying profit maximization ways right now. But one of the ways I'd like to see, kind of like smart pricing to go further is like on things like airline tickets, right? Like you see empty seats on every flight, and not on every flight, a lot of flights, right? And I, personally would like to see more smart pricing, like, oh, we're just going to lower the price of the seat as it goes in until it sells, right? If we have X amount, they start lowering it. Like, there's a lot of food waste. What would really be nice is if we started to see like more like price adjustments, I'd say in apps or whatever, in like all these places that have like inventory or whatever. Like you do see some sales, but that's a really antiquated system, right? Like I would love for like Whole Foods or whoever to like send me like notices on like, oh, this is like cheap, it's about to expire, that kind of thing. I'd probably buy stuff like that. I really like to cook, and I'd just like buy, like I would buy stuff like that, ingredients, be like, oh yeah. But like there's so many instances of that, and my point is I wish we saw more full optimizations of price, and not just like, oh, like if there's a lot of demand, like how much can we like overcharge people, right? That's just one side, right? And one of the worst things I've ever heard from a billionaire was I was pitching more efficiency. It was just a general AI pitch, and I was pitching like more efficiency for farming operations. And I was just like, well, you could test bonuses for people like picking the crops, like whereby if they like were more efficient, beat a certain margin, like whatever, like baseline, they could be eligible for a bonus for that day. And like, this is a good example of that. And like, basically I got laughed at by this billionaire. And he said something to the effect of, these people make $1 a day. Like we don't need to be like offering them bonuses or whatever. And then I was just like, I was very quickly like, even you like, even just a thought exercise, if there was an amount of a bonus that you could pay them to get more output on a daily basis and have less crop loss, like you wouldn't do that. And he just like, it could not, like the greed was like so ingrained in this person that like it didn't compute for him. And I feel like that is not like, I don't think that extreme. Like I said, that was the worst thing I've ever heard in terms of this problem. But yeah, I think it goes without saying that that there's a lot of this seeking to gouge as much as possible when you can go the other way too. And there's plenty of ways it works out for both sides if you do.
Well, we are coming to the end of our stream here, and I'm taking a look at the markets across the board, and they're almost all within 0.1% of the flat line. So for all this volatility talk not playing out today, I guess there's still a lot of time. We've seen a lot of end of the day swings.
The Bulls and Bears are fighting.
Yeah, we'll see who wins the day by 4 p.m. But thank you all for tuning in. Thank you, George. We'll be back Wednesday, 3 p.m. Bye, everyone.
Thank you.